Welcome to the inaugural navigation trading show. One of my favorite things on any show that I do is about 10 minutes before the show starts, I message Matt and say, I know you weren't involved in this at all, but would you jump on real quick? So Matt is joining us for a couple minutes to say hi too. Steve, how the heck are you?
Doing great. Happy to have the new show rolling. I'm excited about it.
I think it's gonna be awesome. Well, listen, I've worked very hard and it's sad because I'm not good at it at all. So that's the joy of it to work as hard as I do on intro videos for what the product is the difference is crazy. So anyway, I'm gonna
And it's
start.
all a secret to me, so I'm gonna see it as soon as everybody else does.
I did not share this with Steve. So here we go. Here's the opening theme show song to the navigation show. Here we go.
On a Tuesday at noon, when the market's confused, Steve strolls in with a chart and some probable news. Troy fires up Omega like, let's model this mess, while traders at home whisper, please help me stress test. It's the show where the candles dance, volatility takes its chance. Steve says rules, Troy says math, together they chart a hilarious path. Grab your lunch, don't be late, they'll tell you why the market's weird again. Oh, great. They're calling out levels, volatility rebels, equity drama, and index devils. One guy's calm, the other's pressing buttons fast. Is this bullish? Is this bearish? Ah, depends on the past. So tune in, laugh, and maybe learn to. These two make the chaos look almost doable for you. Every Tuesday at noon, hit that stream real quick, because markets are wild. And these two are slick.
Amazing.
I'm so proud.
Amazing.
It's like watching a child, watching a baby go to his first day of school. So, Steve,
great.
For those who don't know you, this is, I love the feedback art, way too long. My goal is to make it 4 or 5 minutes. Eventually I'd like this intro song to be 30 to 40 minutes of the show,
Yeah.
but we'll see what happens. Steve, how you doing? First off, everybody who doesn't know you, who the heck are you? And what do you do?
So been trading since 99, early 2000-ish, mostly directional futures, stocks at that point. Started trading options around 2006 and started navigation trading to start teaching people what I was doing end of 2015, early 2016. And so we have kind of step-by-step strategy courses. We stream live every day for the first and last hour every day. Just kind of all things options.
I've said this before. I learned options from you, a large part of it, and your content has always been great. You are a madman. You trade more than anybody I've ever seen in my life, and
I'm trying to scale that down, Troy.
I know. I mean, it's not always it's not always, there's days where you're like, what the heck am I doing? But, you are not afraid to try new things, which is something that I've always appreciated about you. Even today, I mean, I know in your community, you've been popping on some day trades. What all have you done today, Steve?
Today I took a short using puts in Nvidia this morning. That I ended up just closing out for a small loss. I was trying to, it was relatively weak compared to the rest of the market, and it was kind of holding below its pre-market low, which is a level that I sometimes use. And it just kind of chopped around and ended up pushing up above that level. So I closed it out. So took a little loss on that one. I also took calls in MSTR, and that was really more of a swing trade, and it just ended up exploding today. So I already got out of some of that. I got in some calls at like $8.50, and they're trading for about 14 now. So I got out of some of that, and I'll be holding that overnight. Like I said, I was kind of looking at it as a swing trade. If you're looking at the daily chart, you can kind of see it's kind of had this downtrend, and it's kind of breaking out of that today. And so I'm kind of using that trend line as my line in the sand. And we got some good momentum going in Bitcoin and some of the other crypto stocks. So I got into that for a swing, and it's already working well.
When you're go ahead, Matt.
I was just curious, Steve, do you do anything with IBIT, which is one of the Bitcoin ETF?
Yeah. I'll trade directional puts and calls on that ETF. Sometimes I'll do futures on MBT as well.
Okay.
But yeah, I have on my main monitor that I kind of watch the markets on. I've got SPY, QQQ, IWM, and IBIT.
Got it.
So that I can kind of see what all those are doing at the
I'm
navigating everything else.
Anecdotally, it seems like more. I've been asked about it a couple times about us even adding it maybe someday, and it just seems like anecdotally it's getting kind of solidified as like one of the ways that people kind of trade Bitcoin without going into like Coinbase and trading like real complex structures or whatever. It's just a little bit simpler way to take a direction, you know?
Yeah.
So
I'd like to see them come out with daily options on that one.
Yes. Cause it's once a week, right? There's 7 days. I think they're every 7 days right now. Every Friday.
But I use it primarily. I mean, I do trade it sometimes, but like today I was using it as a benchmark to MSTR. And so a big thing that I like to do, I kind of mentioned on NVIDIA, it was relatively weak compared to the rest of the market. So I was taking it short. So I'm always looking for those individual stocks that either have that relative weakness to go short or relative strength to go long. And so if I'm trading Coinbase or MSTR or even to some extent Robinhood or Circle, I always want to know I always have IBIT up there because I'm using that as kind of the relative benchmark. Whereas if I'm trading Tesla or NVIDIA or Google or Amazon or any of the Mag 7, I'm looking at the Qs or SPY as kind of the relative benchmark. And so that's the primary way that I use that one.
That makes sense. Yeah. And when you're doing swing trades, for someone who doesn't do a lot of swing trades, what's the duration on those? And I guess with most equities, you're going to do maybe the closest expiration. So just that Friday expiration.
When I'm doing day trades, I'm always using the closest expiration. If I'm trading SPY or IWM or QQQ, sometimes I'll trade even 0 DTE. If I'm, it's got to be something that's moving that I'm anticipating a quick move on so that the theta decay doesn't kill me. Yeah. But yeah, for the most part on stocks, I'm using the nearest. If I'm doing a swing trade like the one I did on MSTR, I actually went out to the 24 DTE options because I thought it may kind of chop around. We have FOMC tomorrow. And so I bought a little bit more time on that one. So on swing trades, it just depends, so I'll go anywhere from 7 to 30 days out on those.
Okay. Are you doing 50 delta in general, or are you kind of going out of the money?
I usually start a little bit out of the money. I think I started a couple strikes out of the money on MSTR, and now it's in the money already. So I like that. I like that bang for the buck when you buy the slightly out of the money and then they push into the money. You get a nice little pop in premium.
That makes sense. I mean, and one of the things that's interesting to me, like you trade a lot, but you also just share a lot of what you're doing. That's something that I've always found that like that's kind of a sign in my mind. I mean, we work with a lot of affiliates, at Option Omega and things like that, but that's one of the signs in my mind of like a really healthy trader educator is how much they're willing to share. Like what, but sometimes it's a little crazy to me because if I was in your shoes, I'm like, man, you got some good stuff that I would hide because I'm not a good person. And you are, but why do you share so much? Like, why are you up for just giving so much stuff, information out?
Yeah. Several reasons. One would be I've just always found the more that I share, the more that I teach, the more detail and secret sauce that I give away, it comes back tenfold. Like I started navigation trading because I had very specific strategies that I was successful with, and I wanted to share those with other people. But the knowledge and feedback and gains that I've received in my own trading since starting navigation trading is crazy. I would never be the trader I am today without the community and learning stuff from all the members. So that's number one. Number two, let's just use an option omega backtest as an example. Sometimes I'll see people like, they'll share screenshots of an OO backtest and they'll blur out certain details.
Yeah.
And I'm just like, what are you doing? Like,
I'm familiar.
Get over yourself. Like literally, like if you have this crazy backtest that you enter at 1048 and it doesn't do well if you enter at 1049, like it's not a valid strategy. Like it's just an over optimized, over filtered strategy that's never going to have legs, consistent legs over the long term. And so it's like I don't understand that concept of like holding back information. Like I share all the back tests I use. I share all that stuff because for one, I already said, the more I share, the more I get back. But the other key thing is like, I could give 100 traders the same back test and we would literally see 100 different results.
Oh my gosh. Yeah.
It would literally follow the statistical bell curve, right? You'd have the outliers that lose money. You'd have the outliers that make a lot of money. And then everybody else would fall into the statistical bell curve. I mean, that's just how it is.
Yeah.
It's like, so the whole idea of like, and I think it used to be more prominent, when I first started trading, that there was a lot more secretive things. And I think, just the internet and the nature of no BS, people getting tired of BS. A lot of that, it has gone away more than it used to be anyway. But you still see people, trying to be secretive as if they have something that, they don't want to share because they think they'll lose their edge. Well, if they think that, they just don't understand how the markets work.
Yeah. Yeah. That's 100%. I know, talking to Dan, who does the morning show with us, he, he'll do these webinars a lot of times and he'll give stuff away and people will come to him and be like, hey, that's a strategy that like I trade. I'd prefer for you not to like, share it. I know I learned it from you, but I'd prefer you not to share it. And his thing is always like, you could give it to hundreds of people, but just what you said, like, tons of people, as soon as they lose twice, they're never going to trade it again anyway. And so that's part of the deal as well. So no, that makes total sense to me. And you seem to always, be like, the way you look at backtesting is super interesting to me. So like, give me an example of like the back test that you do. Like you'll do calendars a lot and things like that, but I've noticed that the way you enter them is pretty unique in the sense of like, you'll use the automation tool to put them on. And correct me if I'm wrong, but you'll use them to put them on, but you're kind of monitoring them. You don't have like specific set exits like, a lot of people do. Is that right?
Yeah, to a certain extent. So I've gravitated over the last few years.
Sure.
There's at one point I was, I'd have a back test and I would just follow it to a T, trust the back test and just ride it. Right. And obviously what happens over time is that a lot of strategies are cyclical, right? They'll work for a period of time and they'll stop working. Something else will work for a period of time and they'll stop working. And a lot of that was me, curve fitting, over optimizing things and not really realizing it. And so, it just got to a point where I was, constantly, finding the new best back test and kind of switching strategies and things like that. By the way, there's nothing wrong with that either. Like there's some, I know we have some very successful members who constantly tweak and update their back tests, and they look at the 30, 60, 90 day, 1 year performance and beyond, and they're constantly tweaking those and they do very well doing that. I just, that just didn't, that wasn't a good fit for me. And so what I found was a better fit for me, and this is just through experience, was I like to use the back tests as a structure, as a guide for, to prove validity of a strategy. And then I use a little bit of discretion to manage it, so like calendars, like you were saying, there's calendars that I will get into on an automated basis, but I won't necessarily follow the back test to a T.
Yeah.
Sometimes I'm just, well, right now I'm rarely holding things overnight. So I'm doing so much intraday. So I'm getting into like a 6-7 calendar on Fridays, for example. But I'm typically not holding it overnight or holding it over the weekend. Looking at the back test, there's absolute validity to doing that. I just kind of got away from it in April when the Trump tariff markets were going crazy. And I got used to coming into the day with a clean slate with no overnight risk. And I was like, I kind of like this.
Yeah. Yeah.
And so I've really gravitated my focus to intraday trading. And so I still use the back test all the time. I mean, I'm running back tests on a daily basis, but I just use it as a guide. I just use it as a structure to validate a strategy. And then I trade a little bit more discretionary around that.
Yeah, no, that makes complete sense. Matt, I see Matt's head.
Oh my God. I mean, listen, you're cooking on so many different things. I feel like there's about 3 hours of conversation on what you said so far, Steve, but in a really good way. I think, I haven't been trading for 20 years and I'm not as smart as Steve. So I am a trust the back test guy, because I can't beat my own back tests. But what I use, you're one of the examples in my head, and we have other people in the OO community who can, and they can enter discretionarily based on a concept. And back testing is still really useful in that way because you can validate an idea.
Exactly.
And that's the flip end of the spectrum from somebody who's like, I was 1 strike different and this exited 1 minute different.
Yep.
Well, that's because you had strike conflict on this and the test and everything worked. And they spend 3 hours trying to figure that out. It's like, there's nothing to figure out. Like it's all, everything's fine. It's all valid. And I think that's like the kind of thing that you probably develop over the years and years of repetition of doing this. I mean, you've been trading for 25 years, Steve, right? Like, are you still learning? Do you feel like you're still learning stuff today? Did 2025 teach you anything?
Every day.
Yeah.
Yeah. Like I didn't come into 2025. I put together a game plan, kind of a trade plan for the year. And this happens every single year. I didn't come into this year thinking that directional day trading using long puts and long calls was going to be my most profitable strategy this year. Wasn't even on my radar. Literally wasn't even part of my plan. And then the volatility picked up and I just took advantage of it. And here we are. That's kind of been my focus more than anything else. So yeah, it just depends on, what's going on and kind of how I'm perceiving the markets is part of it.
I think it's hard for me because you've been trading 25 years, but you look like you're 29, and I've been trading 10 years, but I look like I'm 80. So it's a weird vibe. So as the goal of this show, obviously, is like you have someone who's been trading a long time, who is a very good trader, and uses Option Omega for a lot of it. And does what he said. He like uses Option Omega for validity, but then continues to trade what he sees in front of him. A couple questions in the chat that I think are helpful for people, Steve, if you're up for it. How do you know when to stop trading a strategy if it's giving a loss? I mean,
Yeah, that's a really, if I knew the answer to that,
about to
I would.
say, I was like, please don't tell anybody. Just tell me off air if you know.
I share
the
everything,
answer.
Troy. I share
I know.
everything.
Dang it.
No, yeah, that's a difficult one, man. That's part of kind of what I got to when I was really religiously just kind of following the back test, and then it would stop working. And that was always the dilemma. And my, whatever you want to call it, my personality or whatever it is, I have the tendency to hold on too long. So even if that thing was just bleeding and the strategy just wasn't working, I would have a tendency to push through and just keep trading it. I'm trading the back test. I'm following the back test. And sometimes that was good, right? You'd have a little drawdown and then it would pull right back out of it. And I'd be right back in good, with that specific strategy. But other times I would hold on too long and it would just keep underperforming. I didn't recognize the kind of the shift in the market environment or whatever it was. And I would continue to trade a losing strategy. And so there's no magic answer to that question. It's one of those things where you have to have kind of a mechanical process in my mind. For example, I mentioned I've got some, community members who they have a very specific way that they do that. And so in other words, they update their back tests that they're trading on a daily basis, and they're looking at the last 30 days, the last 60 days, the last 90 days, the last 6 months, 1 year, whatever it is. And they're constantly tweaking based on that data. And I think, and in my mind, in my opinion, those, some of those back tests are very over optimized, curve fitted. But by constantly, continually optimizing and having a very methodical process for doing that, I think that's kind of the way you have to do it if that's the style of trading that you're going to do.
Yeah.
If you're going to continue to, over optimize back test and curve fit them, then you have to have that kind of process. I kind of went the other direction where I wasn't really comfortable scaling position size based on that. And so I took the other approach, which is I'm still going to use the back test as a guide, but I'm going to use my experience in trading and kind of trade around it.
And to me, the example of that is like you've got a calendar that you put on that, in automation platform, option maker platform. And there's times where you'll take it off and there's times where you'll hold it according more or less to the back test of it, And so I think there's validity in that. The thing that's always interesting to me, how you solve that question, it's unsolvable. The way I look at it, or the way I tell people, is like, if you have a back test and it says that you have a 13% max drawdown in the thing, and you're at 20% max drawdown, something's changed, right? It's, just try to be as mechanical as you can if you want to play that game. If you want to be the mechanical guy or girl, be mechanical. So like, look at how many times you've lost in a row. Have you lost 3 times in a row and now you're at 6 losses in a row? Something's changed. There's data that's different now. And so you kind of have to address it that way. The spectrum of traders and it's interesting to see. You see the people, like Matt said, that can kind of get a concept and trade around it. But then there's the other people, like Matt said, that like or you said in your community, there's people that like every day they're optimizing their trade. The other thing, another question that you're kind of speaking to, shout out Top Warrants. Feel like I'm in the overfitting phase at the moment. How do you get out of that, Steve? I mean, what do you do?
Well, I think, I come from a trading space where I traded before I ever back tested. I think there's a lot of folks that, probably come into trading through your community, through your Discord, and their first taste of trading is trading a back test. And so that's all they know.
Yeah.
And so, I think it just comes down to, kind of going back to experience, I know this isn't a good answer, but I traded before back tests were ever available. And so, um, I was profitable. I knew, I knew how to trade before the back test. And so when I shifted over to being pretty exclusive on trading back tests, and then things would go wrong. And going back to the original question, I wouldn't quite know if I should stick with it because it was starting to lose, or change it, or, all those different things that we go through. That's kind of just why I shifted into going back to my roots and,
Yep.
just trading based on how I knew, and understanding, with your example of calendars, going back to understanding they have the relationship of implied volatility between the front and the back, and those kind of things. And like the one that I just took on Friday, for example, a 6-7, which a lot of times I'll close out by the end of the day. It was very profitable at the end of the day on Friday. I could have just closed it and booked profits, but I was like, okay, we've got FOMC next week on Wednesday. There's zero news on Monday. We had jolts today, which ended up not really creating much of a reaction at all. But based on those factors, that played into my decision to close some of it and hold some of it over the weekend. So those are just little things that, and I share those with my community as I'm doing them. But those are things that, depending on what your level of experience is, how long you've been trading, that's something that just kind of comes from time, unfortunately.
And listen, I'm not going to spend every week, as the kids say, just glazing Steve. But today is the day where I'll just do it. A couple 6-7 references. Thank you, fellas. We all have kids in here. That's right. One of the things that's interesting to me is like you'll do that. I mean, like you will trade discretionarily, and I've seen a lot in my own journey running a company. Like I've seen a lot of people who do that type of thing, but they will only tell you the situations where you look like a genius doing that. They won't tell you the ones where it didn't work out. You just tell people what the price action was of the thing. Like I closed it for a loser. I closed it for a winner. You just tell people the truth. When you're learning to trade, you want someone like Steve that's just going to tell you when it worked and when it didn't work. Because especially if someone's going to trust your trading style, they have to know when it worked and not worked, to where they can get into your mind a little bit about why do it then and not do it at other times, And so I appreciate that about you. Tom Lee, a friend of the show, says Steve's been DMing me for crypto signal service. Nice to put a face to the person finally. As someone who also runs a Discord and gets text messages, it'd be a good thing, I think, beginning first show. Steve, you'll never ask or DM people about financial advice, will you?
Never. All the Discord scammers is typically they're asking you to set up an account, and they're going to copy, they're going to trade for you. That's all scam stuff. Stay away.
You've been doing this for a couple of years. What's sad to me, like I thought that for sure when we launched the Discord, like it started happening, and like there have been people who've like lost a lot of money, and it's really sad. It's really sad. So, you say it left and right, but like never going to DM you asking about crypto. The other thing too is like one of the things with that, when you join a community and someone starts DMing you, the owner of the community or whatever, are they suggesting something that you've never seen them trade? Like Steve, Steve's like, is he going to ask you suddenly to join some brokerage in Africa? Like just stuff that like,
and just to confirm, I almost never would DM somebody as soon as they joined. So if you get a DM as soon as you join, probably not me. 99.9% chance.
Take the money out of the Nigerian brokerage. Get out of there. You don't want a part of that. Steve, like one of the things, like I imagine going through the way you trade, you do have to have that mental kind of reflection, looking back and be like, why did I do that? How did it work out? Through the years, I've seen you use different tools to kind of document that. Like, what are you doing now to kind of document how you trade and the journey you're on?
Yeah, I started off just using good old spreadsheets, and then I wanted more data, and so at one point I was a couple years ago I was using Trader Sync, and it became a situation where, like, if I was trading a lot of zero DTE SPX trades, and I happened to use the same strike multiple times, or more than one time in a day, it would group them incorrectly, and then it didn't expire the options correctly, and so I was spending like 90 minutes a day after the market closed just reconciling my trades. And I was like, you know what? This is supposed to be helping me become more efficient. And it's becoming like I would,
It's a
as soon as the
huge
bell
burden.
would ring,
Yep.
I would be like, oh my God, I got to do this now.
I know.
So I went back to the good old spreadsheets, but I was still lacking some of that data, especially for my directional trading, which was becoming more and more active. And I wasn't using the same strikes the same amount, the same strikes multiple times. So there was no grouping issues. I wasn't letting the trades expire, so there was no expiration issues. And so I went back and jumped on a similar kind of reporting tool. I'm using TradeZilla now, which I
Nice.
really like. It does a lot of the same stuff that TraderSync does, but it's got a little bit better UI, and I like the usability of it a little bit better, and some of the reporting statistics that they provide I like a little bit better as well. So I've been using that specifically just for my directional trading. And so that's how I'm reporting. I'm using that, and then everything else I do, I still just document it on a spreadsheet and report it that way.
I got you.
So, but TradeZella is awesome from a perspective of, like, I have kind of my morning routine in there. I can kind of check off the boxes. I have my trade plan in there every day that I kind of read out loud of, here's what I'm doing, here's my position size, and I found that I have to do that. If I get A lot of times what happens is I will get lazy with my routine, and it's typically when things are going really well.
Yeah.
And so subconsciously, I think it's like, oh, I've got that. I've got that down now. I don't need to review it. And of course, what happens is things kind of go off the rails, and I got to reset and get back to it. So I've been really diligent and disciplined about kind of that pre-market routine, and kind of going through that process every single day. And then, just as importantly, doing my post-market recaps. And so I'm going into the system, going through, reviewing each trade, and saying, here's what I did wrong, here's what I did right, and just kind of taking notes and doing different things on a post-market basis too. So that pre-market routine and the post-market kind of review of my trades has been a big deal. And now I'm getting very detailed stats. So, I talked about, I took puts on Nvidia this morning at the pre-market low. So I can run reports of, taking puts at pre-market lows, and get all of the statistics of all my trades to kind of see how is that working.
Mm.
And along with the notes and everything else, it's been a real game changer for me.
You ever get yourself just like, I've done this before. I need to do it more often, honestly, but like audio free. Now you're putting stuff out to the community. It's a little bit different, but you ever like used voice memos or anything like that just to like record notes to yourself?
Yeah, so that's a huge thing that I've kind of been doing in the last year. And so what I'll do is, well, a couple things. One, TradeZilla has a voice to text feature,
Oh,
so I
nice.
can just hit the button and start talking and kind of do all my notes that way
Oh,
on the
that's
trade.
awesome.
But even before that, I was just using the old iPhone voice memo, where after I would get done with the day, whether it's just kind of overall market thoughts, whether it's about a specific trade, I would just hit record like on my drive home and just start talking into it. And then I would go back and listen to those um, before the market opened. I'd have a specific topic, um, like how to trade on FOMC day. And I would kind of record that as it happened. And then the next FOMC day, I could listen to that and be like, oh yeah, now I remember that. But for a lot of people who have resisted journaling, have resisted, either writing it down or typing it out, and they feel like that's just kind of a painful process. Try voice memos. Like it may be the thing that gets you journaling every day. And the more that you can journal and the more that you can think through out loud, whether it's writing or just talking, it's you can't discount the amount of help that it provides on your overall trading.
Yeah, no, I agree. I want to do one more kind of little chat thing, and then FOMC is coming up, so I would love to hear kind of your thoughts on it. Trader Super Bowl, as I call it. Steve, huge fan of navigation trading. Your Iron Ducks, I modified a bit. He says on option Omega made me profitable, 96% win rate. So
awesome.
I remember this is funny to me. I'll never forget. Like it's one of those weird things in life, and it's crazy doing what I do now. Like being in an office as a developer with Rusty, just working on a product and telling Rusty like, hey, after the market today, the guy that I've been learning from is going to be doing a webinar on this new thing called an iron duck that he created. And I remember going through Tasty and like learning it, like looking at the graph and figuring out what it all is. Like I remember the day it came out, and that it's just so funny to me that because I remember that. I mean, for those who don't know, could you, without necessarily visualizing it, or if you want to visualize it, feel free to. But what is an iron duck, Steve?
Yeah, it's basically just a broken wing skewed iron condor. Right. So you've got, and so it's set up with a very high probability of success, somewhere between 80 and 90+%, where you have a huge downside buffer. So if the market goes down, you've got a huge kind of buffer where it can still land in your iron condor. And then on the upside, there's no risk, or you'll make a little bit of profit. So that's kind of the high level of it.
Yep. And there's been all sorts of variations through the years. I've seen all sorts of, people doing it and things like that. So it's been a fun concept. It's by far the most fun naming. Everybody names their trades.
I always name my trades based on what they look like on the risk graph. And so it kind of looks like a duck. You got the duck head, which is kind of the body. You got the wing, you got the beak. And so that's kind of where that came from. Just an easy way. So I don't have to say, well, it's a broken wing, skewed iron condor. It's easier to say it's an iron duck.
Yeah, it is. It sounds like a 1-1-2. It's not a 1-1-2. I want to be clear on that. It's not, you don't have undefined risk to the downside. Right. A bit. I want to
correct.
Yeah, there's no undefined risk to the downside on an iron duck. So clarify that. Steve, FOMC is coming up. How do you approach stuff like this? Like, one of the things that I love about you, you're a ride or die. There's people, I get people who are like, I don't want to trade FOMC. I don't want to do that. I totally understand that. As someone who's lost lots of money on FOMC days, I can't help myself. I love trading FOMC days. What are you looking for, and how do you approach it?
Yeah, so there's really three strategies that I trade on FOMC days. The first one that I put on near the open is and I'm not going to be able to tell you all the details here, because I even have to kind of rethink through it every time I put it on, and I have it automated, so that helps. But it's basically a ratio diagonal. Front options are 0-day, back options are 2-day. So it's an O2 ratio diagonal, essentially, is what it is. One of our members just kind of came up with it, and so his profile name was Crean. He's an option Omega guy too.
Shout out Crean.
So we literally call this trade the Crean. So it's our FOMC O2 ratio diagonal, aka the Crean. And so that'll be the first trade that I put on, and usually, I mean, those trades are a lot of fun, because a lot of times they'll hit profit target. I mean, we've hit profit target in 30 seconds, 3 minutes, 5 minutes. Sometimes they take longer. Of course, sometimes they don't work, but it's just it's a pretty cool trade that only, for whatever reason, only works on FOMC, based on that relationship between the O2 and how things are priced and structured. My logic around it is, of why it works is, you get kind of this premium pump going into FOMC the day before, but then the day of FOMC, it kind of realizes, okay, that was a little overextended. So it starts to kind of drain that 0 DTE premium, whereas the 2-day are still holding up. And so that's, that's part of how it works. But so that's my initial trade that I do every FOMC. The second one that I do is an iron condor, and I put that on right before the data is released.
Okay.
And the logic behind that is a lot of times, right when the data is released, right at 1 p.m. Central, 2 p.m. Eastern, you get a big vol crush. So now it's what the unknown is now known. And so the premium gets sucked out. But a lot of times you don't get the big move yet. And so the logic is we want price to stay within our iron condor range, but you get a quick vol crush. So between the time where the data comes out and the press conference starts, that 30 minutes,
Yep.
I mean, a lot of times we're closing those out for 30+% of
Crazy.
credit received.
Yeah.
Of course, there's the times where it
doesn't work.
Goes crazy, right? If this upcoming one, we're expecting a rate cut of 25 basis points. But if something other than that comes out, or if some type of wording in the transcript that's released right at the data release is kind of a surprise, then you better be ready to, that's your risk, right? You better be ready to take that on. And so, but that's a trade that's worked really well. And then the third FOMC trade that I do is a long strangle. So I'm typically targeting like a 30 delta long strangle. And per the back test, it was always put on like 5 minutes after the press conference starts. So the logic is a lot of this premium has been sucked out because the data has been released, and now Jerome hits the mic, and as soon as he starts talking, the market can start moving. And and so it's a long 30 delta strangle, and I think my profit target is like 35% or something like that. And so that's been profitable as well. I have started trading that one a little bit more discretionary. So I'll just kind of be watching price action, and I will potentially throw that on at some point during Powell's speech. But those are my 3 FOMC trades.
I love it, and I love the way you're approaching it, because anyone who's looked at FOMC for any length of time knows that there's a micro seasonality to this hour-and-a-half event, which is initial move regulates normally in that 30 minutes. Vol gets reduced a little bit, enough to maybe, like you said, even maybe get 30%, depending on how you structure it. And then the big dog, depending on what he ate for breakfast, all the things, he comes out.
What color his tie is.
What color his tie is. He's a huge part of this. And sometimes he wants to destroy worlds, and sometimes he does. And so that can be real fun when those moments happen. Steve, we've got a couple minutes left. I'd love, if you're up for it, could we model out that cream, just the structure of it, just to see what it looks like?
Yeah, let me.
I can do it too if you want. It's your choice.
Yeah, I don't mind here. Let's see. Am I sharing my screen?
Yep, you're good.
You see my toss?
Yep.
Okay. So, let's see here. Like I said, I have to literally kind of think about it.
Oh, you're fine. I know. I love putting people on the spot. It's my favorite thing to do.
Yeah, Troy, for the listeners, Troy did not tell me we were going to be doing this one.
Yep.
Okay, so essentially what we're doing here is, okay, so we're gonna assume it's FOMC day, and so we're using the 0 and the 2 DTE options. And so essentially I'm going to on the 0 DTE, I'm going to sell a put like 10 points out of the money, and that is going to be one. So I'm going to do the ratio. So that would be the one lot. And then on the call side, that's going to be 10 points out of the money as well. So that's the 0 DTE. And then on the 2 DTE, we go 15 wide on the put side. So I did the 45. So it'd be the 30. That's the one that I would buy 3 times.
Okay.
And then on the call side, I go 5 wide. So it'd be 68, 65. And I do that 3 times.
Okay. So it's
1/3 O2 ratio diagonal.
I'm gonna can I share my screen real quick? Because I want to see it. I just want to save it because I want to see it myself real quick. So let me share and make sure I'm doing it right real quick.
And that's not what it looks like.
Hold on. Can you see my screen, Steve?
Yes.
Okay. So I'm going to go back real quick. I did it wrong, but assuming it's tomorrow, what strikes did you say were the shorts?
The shorts are going to be on the 0 DTE. What strikes?
Mm-hmm.
Well, yeah, this is not right. What am I doing wrong here?
I made this. I blame myself and not Steve because I literally just asked him to do this live. But it's the concept though is 1-3. It's short 1, long 3 on each side.
Correct.
Okay, gotcha.
I've got the strikes mixed up to some degree here. I'm not sure what I'm doing.
That's fine. It's okay because I just want to look at the structure of it for a second. Is that kind of what it looks like a little bit? Where
it just kind of looks like a little bit of a skewed drunk calendar spread.
Yeah.
When you set it up right.
Okay.
Yeah. So and maybe it's just because of the way the options are priced today versus the way they'll be priced tomorrow. But
that's what I was going to say. I think it's because of the option pricing. I might play around with that and get you to send me kind of looking at it tomorrow, and I'll put it in the show notes because I think that's an interesting for people who like to trade it. Those ratio spreads can be really, really fun, like he said.
Well, and just FYI, before you jump in with monster size, they're hard to get filled on.
Yeah.
I use automation to do it to enter and for the profit target, but there's not, on the market making side, apparently there's not a whole lot of people looking to take on 1-3 ratio diagonals. And so and with that many strikes and that ratio, it's just odd. But yeah. I've tried to look at different back tests to figure out a simpler version. And I can't find anything that tests or performs as well. I'm just looking at different calendarized ratio or I'm looking for more of a non-ratio version.
Yeah.
And I just couldn't, I haven't been able to find anything that does better than this. And so I just keep trading it, even though it's tough to get filled. And it's just kind of a weird one. Like as you're seeing here, I'm trying to remember exactly how to set it up because it's a little bit different than most.
Oh yeah. Well, no, I think automating it's the key on something like that. You don't have to sit there and think. There's nothing worse. I mean, and I've done this as an idiot, sitting there at like 158 and like putting something on that you really didn't mean to put on. I certainly have done that. So, well, I'm excited about it, and I'm excited about the show, Steve. I think it's going to be fun. You kind of showed us a lot already today, and so the goal of the show, just for those interested in, we'll take questions. If you have questions for Steve, you can DM me. You don't have to wait till the show starts. DM me in Discord, and we'll be looking at charts.
DM me. Just don't try to offer me any crypto scams.
Yeah, Tom, do not reverse this for him. And I think it'd be fun. I'd like to look at some charts. I would love to learn some of the direction stuff you're doing because one of the things, and we'll save it for next Tuesday. One of the things that I see a lot of people struggle with, I struggle with it, is you're trading both completely neutral stuff all day long, and you're trading crazy direction stuff all day long. How do you mentally do both of those things? And that might take a while to answer, so I don't want to put you on the spot for today, but
yeah, it's hard at first for sure. And here's what's hard about it is getting into the trades isn't usually that big of a deal because, I've got specific criteria where I'm entering a directional trade. I have a specific criteria of why or when I'm entering, say, an iron condor or something delta neutral. The mental game that happens is once you're in both, right? You're now rooting for different things, right? When you're in an iron condor, you're quote unquote rooting for price to stay in a range. When you're in a directional trade, you're looking for that price to explode in the direction that you want it to go. So it's just a mental challenge of compartmentalizing each of those strategies and understanding that, hey, one could not work, one could get stopped, one could be profitable, or both could work, right? The delta neutral could stay there long enough to start taking profits, and then price could move and your directional could be right. Or, you could be delta neutral in SPX and it could work, and your directional in Tesla, and Tesla could be ripping even though the S&P is just sitting there. Kind of like we're seeing right here. The S&P is going down, Tesla's ripping higher. So you really have to compartmentalize it. I struggled with it a lot at first, but it's just like anything. The more you do it and the more you focus on kind of that mental discipline side of it, the easier it gets over time.
Yep. That makes complete sense. Well, listen, I'll let you go. I know you've got some more trades to put on and things like that. Great first show. I'm excited about it.
Loved it.
I will make the intro song 4 to 5 times longer for next week, and we will.
I'll make sure I glaze you next week.
Oh, perfect. Yeah. As the kids say, we'll talk 6-7 a lot and all sorts of, might wear Nike gear. Who knows what'll happen? So, all right, guys, have a great rest of your day, and we will see you next Tuesday.